Trading to tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. Happy Monday to you. Just real quick, if you could let me know, can you hear me, see me, everything looking, sound good? Just give me a status check if you could in the chat. Hope everyone is well rested from this past weekend. I mentioned that I meant to take a picture of what I made in Minecraft. I told you guys who watch every day, my regular friends, if you were here with me on Friday, I mentioned we were playing some Minecraft this weekend. We had a lot of fun with it, and matter of fact, I'm probably gonna play some more. But I built a house. We had a lot of fun. Loud and clear. Okay, good to have you guys back on the stream with me. We've got a lot to do. There is a lot to talk about, a lot of things to see and adventure through in the financial markets here today. As we get started, if you could just do me a quick favor, hit the thumbs up button, subscribe if you're new, all that good stuff, and let's jump right into it. So markets are rebounding here from Friday's sell-off. We had a nice recovery move on Friday's price action. I'm going to take a look at indices. We'll look at gold and silver here today as well. Gold, silver. Guys, gold is ripping here. Look at this move here. Gold nicely breaking through this consolidation zone and making a push here to the upside. Silver, same thing. Nice break through this consolidation zone. Silver actually looking like a potential candidate for me to potentially get long. Silver actually getting a really strong reading. And with that technical breakout to the upside, silver is getting a very bullish reading. And even gold is back on the menu. Wow. Okay. Look. When it comes to the system, I trust the system. I stick with the system. Keep it simple. Silver's getting a really strong reading here on EdgeFinder. Got a nice push going on. 4-hour daily chart looks good. We'll take it. In terms of silver, where am I looking for possible longs? Well, we just broke out of a key area here on the 4-hour chart. Probably easier to see that here. Look at this. So that was resistance. Now turned support. Looking really interesting. I didn't expect to be that quickly reverse in terms of my sentiment on precious metals, but hey, price was consolidating. Nice, beautiful breakout here today. Pull back into this area, looks attractive. So if I get my fibs out on the 4-hour chart, on silver, we've got this 38.2% retracement zone. If you were to get a little bit of downside here in precious metals, $49 an ounce looks pretty good. It's under $50 an ounce. I like the setup. We'll see if we get anything. Same thing here. Gold also looking really good. So if I take a look here, 4-hour support. What was resistance now becomes potential support here. Really strong. My goodness. Yeah, huge upside swing over on the Sunday open. So pull back into this 38.2 to 50% retracement starts to look really interesting. And gold may be bottoming out. As always, we never know with certainty what the market will do next. But this to me looks like a pretty high probability setup that I'd be willing to take a small risk on. Something like this makes a lot of sense. Because remember, the higher time frame is still really bullish. in terms of long-term charts. We had some bearishness come into this market, but pretty quickly you can see how bulls are essentially breaking out. Double topped here, broke support, found resistance. And if you remember last week, I mentioned being pretty hesitant. I was even short gold, closed it for a small profit. And then with this move here, that's a complete 180. We seem to have actually bottomed out and now seem to be looking like we may have formed some sort of inverted head and shoulders here. So interesting. Momentum looks good. Precious metals look strong. On Friday, I went long the Nasdaq. I also bought SMH, the ETF that tracks semiconductors. So NVIDIA, AMD, Qualcomm. The reversal was pretty violent on Friday, right? You saw a huge, sharp move into the close to the upside, and following through here on Monday, we look strong here. We look strong here. I think that you probably see this thing continue to move higher into this week. We'll see. How am I going to manage this trade? Well, what I'd like to see, I would like to see us, I think you have some areas that we need to talk about. If you're looking at NAS, if we can get a push up into this area of resistance, right? I'd like to see us actually be able to take back some of those areas and consistently put in structure to the upside. I think that is likely what will happen on the NASDAQ, but I'll play accordingly. So if we can get further follow through to the upside, this stop loss that I have on the trade is going to start trailing behind higher lows that we may put into market structure. But I am long SMH, the ETF, the semiconductor ETF. We pretty much cut the lows on Friday, although I did not catch the lows on NAS. I was a little early to the NAS. So here's the Qs trade. You can see again, this is the second time in a row that this exact, I mean, this is back to back, at least right now so far, cookie cutter example, same setup, everything like the same EdgeFinder setup that we had a few weeks ago on that Friday sell-off over here. So 2 weeks ago, or 3 weeks ago at this point, whenever this was, a month ago. Yeah. Like 1 month to the day, guys, NASDAQ sold off sharply. And you know what happened? You know what happened? In the context of a bull market, we sold off sharply, tapped a major level of support. And guess what coincided with this? Two things that we need to talk about, because the exact same setup occurred on Friday. The exact same scenario occurred on Friday. That's why I think we could have a follow-through move to the upside. So let me talk about this. The two reasons why this is the exact same setup does not guarantee, by the way, it doesn't guarantee the exact same outcome, but the exact same setup is, number one, NASDAQ on top, EdgeFinder giving it a very solid reading, a +10 reading on NASDAQ, very bullish outlook, long-term trend still intact when we look at the moving averages, crowd sentiment being bearish. That is identical scenario to 1 month ago when we got that NASDAQ entry signal. Then let me show you. Same thing happened. Check this out. Market sentiment on October 10th got super pessimistic right as the market bottomed. What happened on Friday? Bearish sentiment rushed in once again. And again, you don't have to get like, it's sometimes it's so silly how simple this stuff really can be. Everyone panicked on Friday, sold the market, and the last two times that we got that reading, it was an incredible short-term buying the dip signal. Does that guarantee that we're going to have a rush through all-time highs this time again? No. We never have guarantees. So don't be an idiot. Don't size up, leverage, and gamble your whole account on an upside move. Don't do that. But the EdgeFinder keeps finding this setup, and this setup has been incredibly profitable over the last few years. Wait for markets to freak out a little bit. Check the macro. Watch the EdgeFinder scoring. Look for a setup that looks good on the technical chart. And that's where essentially I've had that same trade setup once again take place here. So bought the dip on Friday, stops below, and just like my entry over here, my stop got close, and then we wicked up and reversed. So was I a little bit early on both those entries? Sure. But the buyers are so aggressive here in this market that, again, I don't think we need to overcomplicate this. EdgeFinder reading still strong. Nasdaq plus 10 score. Crowd sentiment got super bearish on Friday. That was a contrarian bullish signal, giving us +2 in sentiment. Institutional activity, we know commitment of traders data is a little outdated, but still, as of the latest data available, institutions have been buying. Technical reads look good, and we're probably going to flip bullish on the short-term trend as well here pretty soon. Seasonality looks very good this time of year. We've talked about that numerous times here on the channel about the Nasdaq. Economic growth signals. We had good services PMIs last week. That really matters. Retail sales numbers, GDP forecast beating expectations, or GDP versus forecast beating expectations. Jobs market's not great, but inflation data also looks good. Like, I don't know how else to say it. To me right now, stop overcomplicating stuff. I am personally a big fan of buying dips in this market because I have the data to say, hey, dips are likely to be bought. Until something changes, dips are likely to be bought. Now, that is not a guarantee. Again, likely does not mean certainty. Likely means right now the data suggests we could see further upside. So again, don't overcomplicate this. I know there's government shutdown noise. A lot of people, oh, government shutdown this, government shutdown that. Sure, that stuff will move the markets in the short run, and then we'll move on to the next story. But the big picture is what? The big picture is this is and has been a market that is on fire. We have tons of spending coming from all the AI companies. We have economic metrics that still look solid for the US economy. That's another tailwind for stocks. Inflation data has been muted compared to expectations, bullish for stocks. Technical readings. The trend is so up, it's not even funny, right? Seasonality looks excellent right now. Again, this is not a market I want to fight. Does that mean it guarantees goes through the high? And if a week from now the market is way lower than where it is, am I just the worst trader on planet Earth? No, because nobody knows for certain what the market's going to do next. But I'm telling you right now, there is no reason for my system, in my approach to the markets, there is no reason to be bearish on this market. Technicals favor bullishness. We beautifully bounced off the 50-day moving average once again to a T. This is why I keep saying it. Exact setup of October 10th. Exact same setup. Does that mean we have the exact same outcome? No, because markets love to trick people. So maybe we do roll over. And if we do, we manage the risk. We never know with certainty. But right now, keep this thing really simple. It's the same setup. We had a fear spike on Friday. EdgeFinder showed us that. We have economic data that still suggests upside for the US economy. EdgeFinder's tracking that, right? It's got a +10 score on the EdgeFinder. I think over here we had a +9 score on the EdgeFinder for NAS. It's the same setup. So, yeah. What's the name of the website? All I can see is EdgeFinder AI. If you want access to the tool that I'm showing here, this is the EdgeFinder. It is a tool that my team and I have been building over the last few years. It is a market screening software. It also helps to generate trading ideas through our top setups algorithm, which is tracking a huge data set. We're looking at the commitment of traders data, retail positioning, like we just got done discussing. We're looking at crowd sentiment across all your favorite assets. If you trade gold, silver, indices, stocks, whatever, Bitcoin, we're tracking data for all of these things. So we're tracking sentiment, technical readings like seasonal trends, market momentum. We're looking at economic growth like GDP statistics, manufacturing and services PMIs, retail sales, inflation statistics like CPI, PPI, PCE, employment change, unemployment, and interest rates. We're looking at all this stuff. The software is automatically looking at all that stuff, pulling it in to the software, and then interpreting how it impacts our favorite charts. So you can see which things are getting strong readings based on all of these metrics. You can do this by top of mind or by hand, but it will take you a significant amount of time and you're likely to make mistakes. Software, the beauty of software is that it pulls in all this data and it looks at all this stuff for us and generates an output for us to look through. That is what the EdgeFinder specializes in. That's why we have thousands of people around the world using our tools and why this thing gets better every single month. And right now it is on super sale. So here's your sales plug for the day. Everything that you're seeing right here, this tool set is 45% off. It is the biggest discount that we do all year long. We just kicked off our Black Friday discount. It's a one-time payment to get access. You don't pay monthly. You don't have to pay endless subscriptions to us. You pay once to get access to EdgeFinder. And it's 45% off right now. If you want some details, here is how you can get them. Right below my camera, you can see the chat for discounts screen or a QR code. Scan that if it's easier, if you're watching on like Twitter or if you're watching somewhere where you can't access our YouTube chat. Just scan that with your phone. It takes 2 seconds. And then also, the other alternative is just to click the link that's been dropped in the live stream chat. Get a copy of the tool if you're serious about macro, if you want to start trading with tools that help find better trading setups through more data, more insights. Stop trading blind. And again, my personal opinion is stop trading just technicals. Just technicals are a dangerous thing in my personal opinion and personal experience. Charts can be deceiving. We want to make sure that the charts marry up nicely with the macro and with market sentiment. We want to look for signals within the data, the real stuff that's moving markets, not just the rear view mirror, which I believe is technical analysis. Technicals, again, perfectly good tool to add into our toolbox. But the forward-looking stuff, in my personal view, is fundamentals and market sentiment. That's the stuff that's forward-looking. The technicals are the reflection afterwards. Again, it's up for debate. People disagree with me all the time on that. But there's people who think like me and there's people who think differently. If you resonate, if you want the tools that we use here on this channel, the thing that I always do on my channel too is I also show, my real portfolio. I'm not, my money is right where my mouth is. This is a real account. I'm on, a US regulated brokerage. All of the trades that I'm placing are, on a real brokerage, and I use EdgeFinder to help me find these setups. So, for legitimacy, I show long-term performance in my account as well. So let me also do that here. See if I can show you that here this morning. When it comes to, who you watch on social media about trading, I say this all the time. It's so important that you don't spend all of your time. Sorry, it's asking me to update a bunch of stuff. Hold on. Okay. It's important that you spend time with people who actually show their account, right? The reason I say that I'm not just showing this, oh, look how much money I've made in the markets. I have other accounts. I don't keep all of my accounts public, to be completely honest, because I don't necessarily want to share everything about my financial life on the internet. But I show this because I've started this account 50K. Now I've added to this account over the years. So it's not, just where it's at purely off of trading gains. I've also added to the account, but in terms of P&L, the account is up 294% since March of 2020. My max drawdown is 32% compared to the S&P 500's, I think 28%. So I've had a similar drawdown to the S&P 500, but have substantially outperformed the performance of the S&P 500. I do this because I know we are trying to attract serious traders to purchase our products. We don't want, people who are going to be quitting day trading or scalping or whatever, like 3 weeks from now. We want people who are real and for the long-term interested in this stuff. If you want our tools, I show you that to show you that it's not smoke and mirrors. This tool has been built by myself and my team. So real verified trading results are also behind this system that we've built here. Now, again, this is not a blind copy service. It's a tool that I use in combination with my own trading. So it's not just Nasdaq's very bullish. Okay, I'm going to go buy it just because it says it. But the tool itself is backed by a profitable result in the form of someone who uses it and shows it on the internet. So, hi, Nick, does macro still lean to risk assets? I would say yes. So if I'm looking here at the top setups view, what we can see here is we have gold joining the fray, but S&P 500, Russell, Chinese stocks, Dow Jones, silver, Nasdaq. These are look at how bullish some of this stuff is right here. You have Nasdaq on top, Bitcoin, right? S&P, Chinese stocks, the Russell, the Dow Jones. So you have a lot of risk on showing up in EdgeFinder's bullish readings. So yeah. Is the signal also a one-time payment? Yes, you can join our VIP group. We have a lifetime membership. If you want to package the two together, also we give bigger discounts if you package the two. So if you're interested in that, come join us inside of the VIP room. Again, we'll drop a chat with us link. It's in the chat or right below in the QR code. You can just scan that. Just chat with us. Let us know what you want. If you want to join the VIP group, etc., just let us know. But yeah, pretty much all of our stock indices are getting bullish readings on EdgeFinder. So I would say yes. I mean, EdgeFinder is clearly on the risk on side of things for now. And that will change. You know, at some point, if the markets do roll over and the data supports it, then EdgeFinder will switch into a bearish perspective on risk assets. But right now, the trend is maintained to the upside in my view. You have moving averages aligned very nicely. Technicals look good. Here's SP500. We tested perfectly this 50-day moving average, bounced off of it once again. Could we be headed to test lower? Sure. Somebody asked me, I had actually numerous questions on my YouTube channel this weekend. I did my Saturday and Sunday videos. I had a couple people ask me, well, Nick, will the EdgeFinder be able to tell us when this market is going to turn before it turns? And the answer is no. The EdgeFinder is kind of more of a trend following, momentum following, macro trend following tool. What that means is how many times, I'm sure you guys have seen this, if you watch other content creators in the trading space, how many have called for tops preemptively because their system signals tried to call a top? A lot of people, you know, the Hindenburg omen, the Buffett indicator, PE ratios are at all high, the Shiller PE ratio, all these different things have said sell this market for years. Like there's been legitimately bears that have just consistently whined that the market has gone higher and higher and higher. Meanwhile, do you know the difference of someone who trend follows versus someone who tries to call the top? Trend followers do not claim to be smarter than everyone else. They just say the trend is up. It will be time to leave the trade when the trend is no longer there. People who think they're so smart and call the tops, in my experience, what's like almost ironic about it is the people who think they're the smartest in markets are losing money trying to call the top. Meanwhile, we've been dip buyers in this market. We rode the gold trend. We didn't try and call the top on gold either, right? Following the market has been so much more consistently profitable for me over the years than trying to think I'm the smartest person in the room and call the top. Trend following is inherently lagging. And nobody wants to hear that because everybody wants to think, oh, I'm with the trend. Yeah. But I'm also going to know when the trend ends. Nope. If you are true trend following, you are going to never be able to call the top, and you accept it and you move on because calling the top is overrated. It's actually a losing bet, in my experience and opinion, to try and call the top. Look, when this market rolls over, I'm going to take some losses and then I'm going to adjust and adapt. But do you know how many times people have called for the top on this move only to sell their portfolios, put it all in cash, just to watch the market rebound higher and the trend to continue? It's overrated to think you know where the top is, in my personal opinion. And I have the results to back it. Like I know I keep falling back on that, but it's because, again, there's a lot of people who talk all over social media. You should really spend more time watching and listening to people who actually have results and show it. I mentioned a couple in my Saturday video and Sunday video. Adam Koo, Financial Education Jeremy, check them out. There are numerous people on social media who actually show their portfolios, their actual accounts. Don't waste your time watching a bunch of people who never show you accounts because they're just talking. Again, there is a big difference between talking trading and actually trading. Let me answer some questions. Signal also one-time payment. Yes, VIP Signals is a one-time payment if you get the lifetime access, which is also 45% off during this time. Da, da, da. Is this mainly to get your daily bias? How often does it update? EdgeFinder updates every 15 minutes, but of course, there's lots of different data points that are on different timers. Like, for example, COT data updates weekly, retail sentiment updates every 30 minutes. So like different tool sets, different indications within EdgeFinder there's all sorts of different automations pulling data and updating the scoring system, etc. EdgeFinder and VIP group are two different things. If I pay one, I get access to the other. No, they are different things. We have a software and we also have a VIP membership. Those are two different products within our, our store. But you can bundle them too if you want both of them. Just again, like I said earlier, easiest way to do it. If you want information about like what are my options, what can I get for this price, what can I, what discounts can I get? QR code right here. Everything's Black Friday price right now. Everything is 45% off. Just message in if you want some details. Get access to EdgeFinder, Stockbox, VIP group. Easiest way to do it. Just click this link here, and it'll connect you to a real person on our staff. Okay, so what did I tell you about gold bears, Nick? Yeah, gold bearishness. That would be a tough ride right now. Again, I closed out of my short by the skin of my teeth. I closed for a profit because the EdgeFinder score here flipped. Now it's bullish, but on Sunday or Friday when I forgot when I closed that trade. Whenever I closed that trade, the score here was +4. And I was like, yeah, that's not enough like bearishness on the EdgeFinder screening anymore to stay in the trade. So I just took a small profit, moved on, and now we've broken out to the upside. Technicals seem to have actually reversed into more of a bullish looking setup. And so I'm actually looking for pullback longs. Stockbox part of the EdgeFinder? Nope, different product. Again, each one of these products are like significant investments on our part. We have a team of people here behind the scenes that are building these tools. Stockbox is a different product. If you are interested in Stockbox though, and you already have EdgeFinder, again, it's a different product for a different market, right? Individual stocks have a lot of different data sets. We're looking at financials like PE ratios, revenue growth, earnings growth, dividends, all those sorts of metrics are tracked within Stockbox. It was a complete start over for us in terms of building stuff compared to like EdgeFinder. So it is a separate product. If you're interested in stocks, check it out. You can scan by individual stock. You can also scan the macro screener is pretty cool. It takes a look at macro data, but fits it specifically to sectors, right? So right now I'm long XLY because XLY is getting a strong reading here on Stockbox, and I liked the technical setup. So if I go pull up XLY, I went long this one during that October 10th period. I think I bought it the next Monday, right? So I bought it like right here. I'm still in that trade. We are starting to look positive here. We got 3 minutes till US stock market opens up. So if we can kind of break through highs, I'm going to trail stops on this one, but consumer discretionary stocks look good to me as well. I also own the individuals, the two big ones. So I am pretty heavily exposed right now to consumer discretionary stocks. I'm long Amazon and I'm long Tesla. So I'm very discretionary stock heavy right now in my portfolio and looking at trail stops, right? So I'm trying to just ride the momentum that's there. And again, no need to call tops. When will the COT data start coming? As soon as it comes in, EdgeFinder will grab it. But the reason it is delayed is due to the government shutdown. Government shutdown is expected to end this week, which would be, by the way, likely a tailwind for the stock market. Why? Well, the market told you that on Friday. This move down, government shutdown's not ending. We're, travel, all this problem, AI bubble, valuations. And then we got a rumor that some advancements in ending the government shutdown were potentially on the table. We have followed through here on Monday. So that seems in the short term to be what is kind of driving the market's obsession right now is the government shutdown stuff. But again, keep your eye on the ball. The big picture is U.S. economy holding up okay. Corporate earnings very strong. Inflation at bay. Fed's going to cut interest rates. This is just not a market I want to fight. So I keep saying that. So yeah, EdgeFinder is expensive. If you build it, it's we're up in the 7 figures in terms of how much it costs to build things like that. It's not cheap. So, you know, here's your alternatives. One of the options, Bloomberg terminal is $2,200 per month. Data and tools are not cheap to build. They are quite expensive to maintain. And we have a support side of things that are answering people's questions about the tool. So there's like overhead that we have. So the tool is not free for us to build and sell or run. So, you know, yes, it is not a cheap product. It is, in fact, it is a pretty expensive product relative to, you know, other products out there. I would say it's very affordable, but nothing about, you know, data and building stuff like that is cheap. So yeah, it is what it is. However, if EdgeFinder is too expensive for you and you don't want to miss the 45% off discount sale, we do also offer payment plans. We can split it up for you. So if that's something you're interested in, message in, just let us know. You can actually, yes, there is a paid plan. So if you want to set something up where you just pay like, you split it into 2 payments or something like that, you can do that. Just message us. The team will help you out. Nick, what do you think about oil? Let's look at it because oil is important here. We are talking about inflation not being too much of a problem. Oil becomes interesting to that discussion if you were to see significant breakouts. I would think like oil's okay within this range. Like you probably shouldn't worry too much about it impacting inflation dramatically. But if you start getting another breakout, we started seeing worries about, you know, inflation spiking dramatically. Had the big pop back in June, July. We'll see what happens there. But for now, oil prices are at bay. This is good for the inflation story. I care about oil prices in sense of how it impacts indices and how it impacts risk assets as a whole. But for now, it's at bay, so it's not a big problem. In terms of oil prices on EdgeFinder, let's just look really quick, see if there's any bullishness. Nope, oil is getting a +2 neutral rating, so this would be a complete pass for me. Technicals look slightly bearish, or technicals do look pretty bearish, but I don't have enough of a conviction to take a trade. How about you introduce a monthly subscription fee? We've had people ask about that. We have preferred to go for payment plans and installments instead of doing a 1 month or month by month payment forever. What we found is that a one-time payment for EdgeFinder serves our ideal customer best. So if you're here for 5 years, if you're here for 10 years, the EdgeFinder is super cheap if you extrapolate that price over time. If you're going to quit trading in 3 weeks from now, you know, what we found is a lot of people who are, you know, in and out of the markets who want cheap access to tools, they're very much, they quit within a month or two. So being like fully transparent, our ideal customer is experienced, long-term, slow and steady, down-to-earth traders. That's who we want to sell our products to. Because if you're here for 5 years, 10 years, a one-time payment or even splitting up the EdgeFinder to 3 payments, it should be looked at as a long-term expense in your business as a trader, and it should be pretty much nothing. I mean, if it's 700 today, I think you can get it $770. If you split that into 2 payments or 3 payments, right? And think about, I'm going to use this for the next 5, 10, 15 years or whatever. That costs you like nothing over that time. So do you have installment plans also for the VIP group? We usually do not, but if you message in, you can get it on the lifetime membership. Okay, guys, there you go. If you have any details, if you need more information, we'll drop the link one more time. Easiest way to get all these answered, just send us a message. Let us know. The support team will help you out. Okay, up next, we have Ivan FX. He's going to be taking a look at some setups here and trade ideas with you guys here. Look at Nasdaq, man, ripping here. S&P 500, Nas in the green again today. Very strong move there. Very nice. All right, up next, Ivan FX. Stay tuned.
Get over here. Come here. A little closer. Come here. Gotcha.
This is what I'm looking at next. And I really hope that New Zealand gets some wind under its sails. Thank you very much for appreciating my beards or today lack of, well, that is what it is, I guess. So, But I did take a euro dollar trade on, I think it was Thursday. Yeah, there's no beard. Yeah, but give you 3 weeks, I'd be like, ho ho ho, Santa Claus. And I probably need to make it go white. But yeah, Thursday I bought a euro dollar. I believe, I should believe at least. It was posted in the group, and I was like, well, weaker PMIs, services, and I believe that we are going to go in for, well, we're going to go back to rate cut because I believe that job market is not as great as we once thought it was going to be. And then at the moment, we have the question of, is the US government going to reopen? That would be, of course, be fantastic for the stock market, for Nasdaq, and that probably is going to send dollar higher. That is kind of my preempt most likely scenario in my head. I can be wrong of everything, but yeah, there it is. So on euro, I am 40 pips in. It's nothing to wake up grandma for, but it's about right. And about S&P 500 and everything else. So though it was mentioned on the last week, not this week, but last week's weekly planning that we have every Sunday at 3:30 p.m. New York, that if price comes down, so it would be that would be about there. If market comes a bit down, it would be great if we can get into those prices. If there's a limit order at 67, 63, or at 66.75. So that was already planned out, pre-planned, and limit ordered out. So that's pretty much great and fantastic. So at this point, and this is where you need, I said a bad word yesterday, but this is where you need to have courage, and longevity, and think, what is going to happen going forward. Is market going to go higher? Sure. Are you going to catch it? Not really. But what if in the event, and the event that happened was, well, we're just going to imagine that AI costs are going to go through the roof, and it's going to decrease the cost, the money that companies make, and then all of a sudden we fall about 3% or something. So that's what I always are talking about when I say wait for the pullbacks, wait, expect them to happen, and then here we go. What's your opinion about Trump's tweet? He will give $2,000 per person. I haven't seen any tweet about that, and that sounds a bit ridiculous, as ridiculous can be ridiculous, if that is true. But it will send dollar lower, and it will send S&P higher. But I don't know. I haven't seen any tweets about that. But if that was to be the case, well, I mean, why not? It will send inflation higher, but after some time at least. But it will eventually, or first, it will weaken the dollar because it will be more was seen as QE. So that's kind of where I am. Euro, bullish, pound. And I had a discussion earlier today, and I saw. So this is, I don't know how much Nick has talked about, so I need to talk about it. We need to have a discussion about it. Is that the budget for the British government is going to be posted about 19th of November, it's about 9 days from now. They are going to increase and change, allegedly, a lot of taxes. So they're going to restrict the taxable the tax-free part of pensions. They're going to potentially change the income tax. They're potentially going to change the national insurance tax. They are on landlords. They have to start paying more on their rental income. Increase property taxes. They are going to have inheritance tax or change. I don't know if they have it, but might go up as well. And also an exit tax, meaning if you try to leave the country, you have to pay whatever that is going to be. And then taxation on lawyers and accountants, and also wealth tax. Now, that is evidently depending, but it's going to make the pound absolutely fall down the toilet. So going forward with this looming danger, I'm not going to be trading pound as I would normally trade pound, because it's absolutely a liability. That market would price that in because that is a massive potential downside to pound. Well, great if you get in, but it's a volatility event beyond. And then once it's fallen enough, I'll probably try to pick up the pieces after at the bottom more than trying to sell, because we don't know how great. Now, on the other side of taxation, which of course sends an economy lower, taking away money from the economy, it tanks the economy, but at the same time, what are you going to spend it on? So on general terms, you're going to be saying, okay, this equals is out, right? Taxation equals the spend they're going to spend on whatever else they want. But that comes at a later day. That doesn't happen at the same time. So if you're taxed now in the month of November, it's not going to be that the same that the government is going to spend the same amount of money in November. So there's a delay. So first, generally, you're going to see market fall, and then I don't think it's going to go higher again, but you're going to see the fall first. And I have said I believe market should react to about 500 pips. I don't know. I honestly do not know how much that's going to impact. If it's going to be a 50 pip move, great. But last time we had a budget that was a bit of out of the blue and really did some damage. That was Liz Truss. Back in the infamous days of 20th of September 2022 or something in that direction, where they crashed the government, the 30-year government bonds, because at the time we had 10% inflation, and they wanted to reduce tax on the wealthy. So now it's going to increase tax. So it's definitely going to be some kind of this looking like. But again, I don't know. I haven't been in a situation where pound has increased taxes that much, or allegedly going to. And second of all, we haven't had a Labour government in the UK for a very long time. So I don't know how much I need to quote unquote fix from the Tory government. So again, that is a political risk. And we just talked about drivers of the market. That is a political risk that I haven't seen on the pound for a very, 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 very long time. I hope I'd never see it again, to be honest with you. But now we know. So that makes me stay away. Okay? So Grim says, what about NAS? I just showed you NAS. What do you mean, bruv? Like, I just did S&P 500. That's the same thing as NAS. You buy the bottom like Nick did, and then what else? What else do you want? What else do you want to happen? Like, in my world, you are targeting, what is it called nowadays? You're targeting 27,000? Sure. And it's going higher, unless you are heavily invested currently and over leveraged, then generally shouldn't be bothering you that we are what NAS is doing, unless you're scalping it. That's all right. I understand that. That's understandable, but it's going higher, bruv. All right, Max. I haven't looked at your messages lately. What's the story in your block? And that's also me saying that I know that you're doing a lot of great things. I'm just wondering. CFDs. So, yeah, I think it's CFDs. Yeah, send me a NAS or not S&P 500 as well, Maxi. But yeah, so Aussie dollar, thought that's going to be the same as a euro dollar trade, as a New Zealand dollar trade. I said yesterday, I think, let's see if I can find this one as well at the same time. We played with seminars. Yesterday I said that wrong. Maxi coming in. Dollar weakness. And that also means Australian dollar, New Zealand dollar, pound, euro strength, and Canadian dollar strength at the same time as the weakness happened. And I think I was pretty much on spot there. Aussie, pound, euro, New Zealand did, at least from yesterday's strengthen. Oops. And to me, that sounds like, okay, about right. I want previous high to broken. That is currently happening. And what I'm looking forward to tomorrow, you can do whatever you want for tomorrow. But what I want to do for tomorrow, unless this reopen of the US government comes in and kicks this one down the toilet, is that tomorrow morning at about London Open, I want price to be somewhere between the 38 and 618. I don't need to use this, but I can do it. Or I'll do pivot points. That would be daily. So somewhere around London Open at about, what can it be, 9 a.m. tomorrow? 8 or 9 a.m. tomorrow. That's about, it's 3 p.m. now. So it's about night in New York, but fair enough. That's kind of what I'm looking for. So somewhere between 65.65 and 64.94, somewhere in here is what I expect the market tomorrow to be at, and not now. So if it does drop now, I'll be like, okay, I'll wait till tomorrow. Why do I wait until tomorrow? Because I believe that the push is London, the pullback is New York, or sorry, the last push is New York, and then Asia is a pullback. Kind of like this, where it does push higher coming into, and then the next morning at about London, it does push higher, or for that matter, market coming into London, and then the push happens after. So to me, that's kind of what I'm generally tends to happen. Doesn't need to, but generally what tends to happen. And that's what I want. I don't want to buy right now because the stop loss I need to put in for this one is about 70 pips at the current rate. And I think it's a bit unnecessary cost to take. Is the government shutting down today? I just saw it on the news flash that there was going to be some voting in the House of Representatives. I'm not going to give you fake news or anything, but I just saw it in the past, in the flash pass, and that would send stock market higher. Can we look at bonds? Okay. I'm just checking. About the UK, the Chancellor, the Minister of Finance, the Chancellor says that it will be possible to stick with the manifesto commitments, but it required deep cuts into capital spending. What does that mean? That means exit of funds of the economy. That's not positive at all. But okay, it is what it is. So, 10-year. 10-year is on the downtrend. And I don't know why, because inflation is ever so slightly higher. But I believe that this indicates that they are expecting this one to come in lower over the 10 years, that they are currently expecting inflation to drop, even though it is currently not. So at a 4% yield, it's about okay. Current inflation in the United States of America is on the 3 number, so slight growth for the next 10 years is currently expected. And also, I've seen that there has been a lot of repricing of interest rates lately in the bond market, and we have gone from 6 to 3 rate cuts by the end of next year. And that is, of course, because of the lack of falling in the current CPI numbers. And I don't know how this government shutdown is going to impact it at all. Do you play CS2? Yes, I do. I love it. Give it to me. I can't. I'm not good at it, but it's kind of like, boys. It's kind of like boys do. You just love to do something. You're not really good at it per se, but you try to be. But it's just a lot of fun. The other day I played ping pong tennis, I think it's called table tennis. I'm absolutely horrible at it, but it was fun. Just have a bit of fun. And I use CS2 or CSGO, whatever, to just get some steam off. Just get some 10 minutes of something that doesn't require my brain to look at inflation numbers or monetary policy statements. So to me, interestingly lower, and then 357 on the 2-year. Okay. I see the decrease. I don't know if I agree with it. I think that this one has a potential to continue higher. I believe that the market now, the bond market, is pricing more of a slowdown in the economy than in my opinion is relevant. So with this US government, if it ever opens up again, would take a turn higher. If it could end today, then decide to not do the debates. Yeah, so I don't know how that works. I'm not an expert on that specifically. So more the fact of, do they or are they not open? And by the facto, and you will see the market move. And who is asking? Someone's asking for gold, and I did not do gold lately or yesterday, but I am generally, and I just saw a headline of you, Nick, and you sold gold, and I was like, huh, okay. You did change your dollar buys as well at the same time then, because man, that's mean. I'm dollar bullish, yeah, gold bullish, given a couple of reasons. Would be, well, relatively low inflation, or what I would also say just low economic performance. So that would be labor. That would be inflation. GDP is really not that low, but that would drive gold higher. Second of all, we have seen a lot of interest from central banks. We have seen a lot of interest from institutionals. And I'm not going to say that I'm predicting this, but my kind of thought process, just technically, could be wrong, going down the line, but a move now is only limited move higher before a bigger sell-off, because how I read the gold market right now with this current price action, that we are not really we have kind of exhausted ourselves, went really quick higher, and then we took But yeah, okay, fair enough. So yeah, so I think that it should go higher, can go higher, probably will go higher, but I don't think we're gonna make all-time high until I'm proven wrong, and until then, I would just say, okay, I'm not going to target any trades beyond 4,300 or so, and then just keep it a slack. Also, do remember that gold market is heavily manipulated, so that it may appear that somebody does sell and it looks like a good sell, but yeah, go by the fact, go by the drivers, go by where opposite of the bond market is going, go by where the interest rates, the inflation is going, and then take it from there. Solid goal at 41,000. I wish I didn't see that fall out, but okay, you do you. You're good. Okay, so I think that dollar yen, and I can't explain it to you other than yen pairs are going higher because of risk sentiment. But then if the US government opens up again, then this one could have, and if the reaction of the market, which I predict to be bullish, then this one could have legs higher. And 153 is, solid level to be buying, though we're about 100 pips too late for that matter. I feel like right now I'm dollar bearish, yen bearish, so I don't want to touch it. It feels like it's a bit of a burn, more like the up and downs happening lately, and I'll be more the fact that it did go higher, and then I'll be interested more than I'm going to be aggressive buying into it because I was a wizard. But the wizard I was the Euro Yen trade I took on Thursday. As a smasher there. So that's kind of my way of trading the yen move more than anything else. The yen weakness, the euro strength, the dollar weakness. And I am in it for about 160, 155 pips at the moment. Was 180 almost up. And I am very much comfortable in this situation, I would argue. And that's kind of the play I would rather take, because if dollar yen was supposed to go higher, given the current situation, why didn't it start at the same time as euro yen did? And it has barely, it's moved about 120 pips, but it hasn't done the same thing because dollar hasn't been strong at the same time because it's been weak. So I fear this is more like a range. We're just going to be strong and weak at the same time, more than what I need is a divergence between the two. But you're so funny. What do you think about copper? Yeah. As a generality, I mean, with China coming out with slight increase in their inflation, and if dollar lowers, so if dollar falls, then might have legs higher, to be honest with you. Other than it crashed back in August, but yeah, okay. Yeah, I think though it goes slower, I think we are going to do like Euro Swissy. We will be back to these levels later. I don't know when, but to me, generally, because if you look at the markets generally, yes, we're having a slowdown, but we're still running, we're still going, we're not recessioning, then this will be a very bad situation. So the thing is about when you're looking at the market structure, economics fundamentals, is are we dead? And it's kind of like doing a CPI on a fish. Like, is it breathing? Yes, it's breathing. It is working. It is going forward. So to me, since I call higher, but I wouldn't be selling it if I was myself. And I don't know why I've written that from later, but Bitcoin, BTC. I say I hope it goes higher. I believe it goes higher, but I would rather be in the S&P 500 at the moment, with the current price action. And I don't know why it doesn't get legs. Maybe waiting for some stronger move in December. But it's a new high and a pullback, so generally higher is what I'm expecting it to do. And if it makes a new low, okay, whatever then. I'll take it. So for tomorrow, I'm gonna have a very deep look into dollar pairs, yen pairs, New Zealand yen, Aussie dollar, euro dollar, New Zealand dollar, dollar Swiss, and see where we are. I am looking for dollar shorts, yen shorts, and by that time everything could have changed. But that's kind of where things is going. What's my thoughts on New Zealand CAD? I don't know. I don't want to trade. I don't want to trade currency pair commodities against each other. So that's me. I hope that you have a great, fantastic day going forward, and that you will enjoy Marco as well as you enjoyed me. And if you need mentorship, I am the mentor here at A1 Trading. Just hit me a DM in Discord, and I'll try to help you out as much as I can. All right, cool. Boom. See ya.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment of the stream. I do hope everyone is doing well. So let me open up my charts, not these ones. It's live. Yeah, these ones. And also let me open up Forex calendar, EdgeFinder as well. And DNA Funded. Just give me 1 second. I need to open up DNA Funded accounts. So just to check something, and also for demonstration purposes, of course. So let's see if I can just put this. No. Sorry, I'm having a bit of technical difficulties, but yeah, I can do that a bit later. Anyways, what has been going on in the charts? Here is my watch list. Not here, but here. This is the watch list: Nasdaq, gold, silver, USD, CAD. I'm looking to buy silver, so that's my top priority right now, is actually buying silver. I like this breakout candle right there. I think it has a nice sort of clean close on the top. I like the pullback, so I like that I'm getting in on a bit of a discount, like minus 8%. That's pretty good. And if we go to the EdgeFinder, very bullish. Damn. Okay. We're getting a very, very bullish reading. That is super good. So my trade idea is gonna be placing a buy limit probably somewhere here after this daily candle closes. So just one more confirmation that I'm needing is basically I want to see the price break out out of the range and retest this level. Okay, so then that would be my buy limit level, and that would be the game plan to get in. Oh, nope. Stop loss is probably going to go somewhere below the 20 MA, maybe a bit bigger. No, I think this looks good, aiming for the all-time highs. So I think this could be a pretty nice trade. Although COTS are bullish, they are lagging. So the US government shutdown is still in progress. It's still lasting. So I'm not sure if this is the latest data from the commitment of traders. If we go to institutional positioning, yeah, it's delayed due to government shutdown. So the last data we had was probably from 1 month ago. So we should ignore this. Rest of the signals are mostly bullish. So I do like that. Why do I prefer silver to gold? Well, let's also delete this. I prefer gold to silver silver to gold because of this level. I think silver has had a bit more of a rejection, and I've had some nice trades before on silver. So it moves more. It's a bit more volatile. If we do this, gold / XAG USD. So let's check out the gold to silver ratio. Gold to silver ratio. Okay, it's back in the middle. So the gold to silver ratio is not really telling me that gold is better to buy or silver is a better buy. It's kind of balanced. It's kind of in the middle. So I'm not getting a clear reading from this particular chart. That means basically both could be good. Both could be interesting at this point. As far as the Nasdaq goes, so the Nasdaq, I think there's a bit more downside on the Nasdaq. If you have been following my streams for a while or for the last week, you would know that I'm kind of bearish on the stock market. I'm kind of bearish on the Nasdaq, technology stock market in particular, because I think the AI story is getting a bit stale. So investors are starting to wake up and they're starting to notice this massive capex spending, which is pretty problematic, right? So you cannot just spend and not have any concrete evidence that you're going to pay off your investment. If you look at companies like Meta, this was the earnings call or the conference call when they announced massive spending into AI. Initial reaction was bullish. They tried to do it again. The reaction was bearish. So you can see a clear shift in the narrative where AI spending was super bullish and then AI spending became a bearish confluence. If you look at Oracle, this was an announcement of partnership with OpenAI, an announcement of massive investments, massive spending, basically writing a blank check to OpenAI. What does Oracle even do? I don't even know. I haven't heard about Oracle for a while. I probably should have, but I haven't. Anyways, it did a round trip back to the initial level. Okay, so it did a round trip back to the initial level. That means the investors are probably doubting the deal, and they're probably not seeing how the massive investment will actually pay off in real life. You can look at Palantir, where I had a nice short position, which fortunately I closed because it would have been, so I took profits on this one. It would have been a break even or a loss if I didn't close it. It was a small bet, just a small bet on this AI thing being sort of bearish and negative. Let's now hide this so that it doesn't get in the way. So Palantir also had a pretty bearish reaction on top of this AI doubt, sort of doubting the AI sector, doubting the AI revolution, doubting the capex spending needed to fuel AI, right? Because if you look at The biggest player, OpenAI. So OpenAI is the biggest AI player in the world, I would say, especially in the US stock market, because they are doing deals with every single company. If you look at Sam Altman, he's the guy running OpenAI, which is supposedly a non-profit, and Musk financed the whole thing at the start, so that's pretty funny. But the market is starting to question, is Sam Altman Elon Musk, or is Sam Altman Sam Bankman-Fried? Is he a legit businessman and can he do wonders, or is he a scammer? I would say he's somewhere in the middle. He's not a revolutionary like Musk, and he's not a total scammer like Bankman-Fried. There has been a recent interview with Sam Altman, and he was asked, what do you think of this massive spending? Is it going to pay off? How do the numbers look? How can you keep spending so much money without having a concrete source of revenue? And his response was, as I found from research, was super unprofessional. And he basically said, if you're not a believer, you can go pound sand. Now, that is not how you would like your top CEO to behave, right? Because if you give him a question, he should be able to have an answer that is backed up by numbers. So it kind of reminds you of Enron and the whole fiasco with Enron. It turned out to be a whole scam, if I remember correctly. So yeah, I'm not liking how Sam Altman is acting lately, and it could produce some bearishness in the markets, in the stock market. Okay. Now, OpenAI is not the only player, of course, but they are the biggest player. And if you look at their revenue compared to their expenses, their revenue is tiny. Only 10% of their users are actually paid users. 90% of the users are free users who are just consuming a massive amount of power, massive amount of electricity, massive amount of basically data servers. Okay, so that is my opinion on the stock market. If you're wondering about some levels, I think 2,400, I think we could hit that. I mean, we have had quite a bounce, so maybe I'm talking out of my butt, but if we do go to this level, I'll definitely be a buyer, both for my long-term investment purposes and as a trading position, as a short-term position. So that is the game plan on the Nasdaq. I told you about gold. I told you about silver. We covered the NAS. USD CAD is currently the only position that I have a lot of confidence in. I do have some other positions which are more sort of tester positions. I'm testing out some different approaches, testing out some different strategies. Basically, USD CAD is my favorite position of 2025. USD relative to the CAD, I think USD is one of the strongest right now. The CAD, one of the weakest. The thing that messed up my position last week was the employment data out of Canada. So if you go back to last week on Forex Factory, you can see employment change and the unemployment rate, which came in, like, the numbers were awesome. So basically, you had awesome numbers for Canada, which produced a lot of issues for my current position. I don't think it's a reason to close my trade. I'm still sticking to my guns. I'm still sticking to the initial game plan, okay, and just trailing my stop loss, and I'm still running profits. So, and I'm still getting positive swaps, which is nice. So yeah, that is the game plan on USD CAD. Just monitoring the position. All of the updates will be in the A1 Discord. So if you want to get inside of the Discord, get these trade signals, you can use my code, which is Marco. MARKO. You can get, I think, 40 or 45% off. There's a massive discount running in November. So make sure to take advantage of the discount. If you're wondering about my ChatGPT challenge, I know there was a couple of questions in the Discord. Let me just bring it up right there. So there was a couple of questions in the Discord, in the A1 Discord, about my challenge. Let me show you. Currently, the equity is 52.8. So I'm up 6%, I believe, which is fine. It's okay. Currently running 2 trades, buy on the S&P, sell on euro dollar. Both trades are in profit, which is good to see. And hopefully I can pass phase 1 until the end of, I don't know, end of this year. End of this year, maybe. I think with the current timeline, as we have had quite a break-even period, I think end of year is a good date to aim to at least pass phase 1. Now, I haven't yet experienced, so this challenge is ChatGPT gives me daily trade signals on the market. I just copy and paste the signals into a DNA-funded challenge. So far, I haven't had a massive drawdown. The biggest drawdown was, I think, 2 to 3%, which is absolutely nothing, absolutely minimal. The worst thing that happened so far was a complete break-even period from 17th of September to, I would say, 26th of October. That was pretty bad. But now we're fortunately running some profit. If you want to get a DNA-funded challenge, if you want to expand your trading capital, you can go with this reliable prop firm. It is ran by professionals, and the best thing about it is there are a couple of reliable prop firms. I'm not just going to say DNA Funded is the only one, but with our discount, which is A1 Live, you get 25% off any challenge. And with that discount code, with 25% off, DNA Funded becomes extremely competitive in terms of its price. So you get an actual reliable prop firm ran by professionals, but you get a pretty good price. I'm not talking about 70% off or 80% off. Those are scam firms, but 25% off is super good, super healthy. Okay. And now let me see the questions. So let's see. Hey Sluggy, hey Max, hey Trading Guru, hey Ballout, hey gang. I'm looking for several silver longs for over a month now. Cool, I think now is a good time, not financial advice. Okay. Silver, yes, so silver definitely interesting. Joshua, what's up? How are you? I'm doing pretty well. Elafi, hello. Welcome to the stream. Gold to 44.50, down to 3600. So I think there is a higher chance of gold going up than gold going down. So I think there is a higher chance we hit 4.5 compared to 3,500. Okay, I think that is more likely to happen, that we actually go up. I mean, the EdgeFinder is bullish, actually very bullish, but we have to ignore the COTS. So COTS should be around 0, I would say, because there's no data right now, no recent data. But still, a bullish reading on silver and gold, I think that tells a good story. I think the uptrend is absolutely strong, absolutely massive, quite a lot of momentum behind it. I definitely don't want to go short. So I want to buy. I want to get in on the nice high probability uptrend. Okay. What's that sound? I'm not sure. But Halloween has passed, so hopefully it's not a ghost. Can you do CAD Swiss? CAD CHF. Yes. CHF. And I'm super bearish on the CAD. I think Swiss should be a bit stronger. So I would say sell. I would say an okay sell. If we filter here, CAD Swiss. Whoop. CAD Swiss. Neutral. Okay, neutral reading. Yeah, I don't have a massive trading edge there on CAD Swiss. I don't think there's a massive trading edge in this price action. But if I had to give you a direction, it would be to sell, because we're in overall downtrend. CAD is still, I think, a weak currency. Yes, the latest data point was strong, but it's just one data point. If you look at the long-term data, I can refresh your memory. If you look at the long-term data for the CAD, all over the place. Unemployment rate is 6.9%, and so it's rising. I mean, there is an overall uptrend on the unemployment. CPI, 2.4%. That's above target. You have to note central banks aim for a 2% inflation rate target. 2.4% is definitely above target. So it's going to be tough for them to cut rates because they're gonna basically raise inflation. Okay, so if they want to help out the GDP, help out the employment, they have to sacrifice something, and that something is inflation. Okay, so business is business. Yes, business is business. How's your second limit order USD CAD trade? Are you going to keep it any longer? Yes. So I'm keeping the position open. I'm keeping the position open, trailing my stop loss. That's it. If you're in the A1 Discord, you're going to get all updates about the position. Marco, test my strategy, 100% return, 0 drawdown. Okay, so of course you can send me the details in Discord. Where do you get your non-economic news and how often do you look at them? Asks Joshua. So if we go to Financial Juice, that is what I use. Okay, so I use Financial Juice. I focus on the market moving news and I focus on Forex. So the latest market moving news, and it's absolutely free. The latest market moving is BOJ summary, 1 member rate hike at current phase would be a process of normalization. Should be bullish for the yen. Okay, so it should be bullish for the yen. Then we had Canadian employment change. You get some numbers that are on Forex Factory, right? But you also get a lot of breaking news stuff. So they also take out some stuff from the press conferences. See, Fed's Powell December cut is not for sure, far from it. That was a big one. That was a pretty important event or statement. Directly from Powell. Okay, nice. Powell is my uncle. Awesome. If you can tell Daddy Powell not to cut in December, I would be pretty grateful, and my USD CAD position would be pretty grateful as well. Uncle Powell. Is he Daddy Powell or Uncle Powell? I'm not sure. Good luck with that account. Thank you. GJ, what do you think about it? GJ. I'm not sure. I'm not sure about GBP-JPY. I hate the pound, right? I mean, the pound is producing bad numbers, especially if you look at the CPI GBP. So 3.8% and rising inflation. What is bullish is the Bank of England sounded pretty hawkish on the last meeting. So that is bullish for the pound, should be definitely bullish. Their sort of future projections, their forward guidance was hawkish, which is the most important part. So if the interest rate number comes out as expected on a central bank decision, then the most important part is the future projections. It is the forward guidance. Okay? So Taco Marco, hey Ballout, what's up? Marco Kiyosaki said gold is going to 27. Oof, no. So if you guys don't know the running joke, Kiyosaki, I think we can even find it, Robert. Kiyosaki Perma Bear. This is it. So this is Mr. Robert Kiyosaki, a scammer, if you ask me. But each time he calls for a market crash, there's a move to the upside. So see right there, crash only beginning, and we just shoot up. Everything crashes coming, we shoot up. Stock market crash, we go up. So just totally crazy. And Of course, he makes all of his money from selling books, and I don't think he has any investments in the market. Otherwise, he would have zero cash left, or he would have $0 left in his account, because he would just be shorting the S&P all the way to the upside. So my point being is, if he's calling for gold to go up, that means gold is probably going to go down. It's the same as with Jim Cramer. So you should do the exact opposite that Jim Cramer does, right? So you should basically do the exact opposite of Jim Cramer, exact opposite of Robert Kiyosaki, but you should do the same thing as that one lady in the U.S. government. I'm not sure. Nancy? Is it Nancy Pelosi? I think that's her, Nancy Pelosi. She has all of the insider trading information, and if you can follow her, you're going to make a bunch of money. Kiyosaki, he's not an idiot, but he's super smart, but he knows what gets clicks. So if you have to think about, how is he making money? Well, he is making money from selling books. So he needs to get a lot of clicks on his accounts for people to know about him, for people to buy his books. What is the best way to get clicks? It is to be a perma bear. It is to call for a crash. It is to call for a top. That gets you the most clicks. If you just say the Nasdaq is going to continue going up, no one will click on your article. No one will like your post, because it doesn't create any controversy. So Kiyosaki, he's a super smart guy, but you should definitely not follow his trading advice or investing advice. So can you check GBPUSD? Yes, we can do that. Broken out, but we had some hawkish commentary from the Bank of England. So we rebounded to the upside, actually. I'm not that interested here. If we go to the top setups, GBPUSD. So GBPUSD is neutral on the EdgeFinder. Yeah, I don't think I have a massive trading edge. I personally don't like this currency pair. What I do like, actually, is selling the Aussie. I think the Aussie should lose some value, because if you look at XME, metals and mining, you're going to notice there has been a pretty large sell-off in the metals and mining department. And what does Australia do? They export a bunch of metals. They do a lot of mining. 30 to 40% of their GDP is metals and mining. So if the price of this industry, if the value of the industry is going lower, that means the demand for Australia's exports should go down. That means the demand for the Australian dollar goes down as well. It's all connected. So you need Australian dollars to buy Australian exports. So I think selling the Aussie is a good play right now, because it is kind of a correlation trade, right? Aussie should follow XME. Aussie should follow this crash. It hasn't yet crashed, but it could. Marco, would you agree that the DXY has been getting stronger, especially after an attempt to break out of that 100 level? I've been leaning into GBPUSD sells. For the DXY, I'm bullish. I am bullish because I have a USD CAD long. I think there could be a bit more of a pullback. So the 100 level was definitely a psychological level. And I do think we can pull back a bit more and then go up. Okay? I do think that can happen. So we can get a bit more downside right there. And then we can continue going higher. Maybe not this high, but I don't know, maybe. Yeah, I think we can actually. Maybe to 101, 101.5, 102. I don't think so, but 101.5 by the end of the year, or 101 by the end of the year, I think it could happen. Especially if we don't get a rate cut. So Mr. Powell, Daddy Powell, Uncle Powell, please don't cut rates in December. So right now we have a 63.6% chance of a rate cut. Looks like it's going to happen, but the probability has been going down. What do you think about copper? I hate copper, and I don't have a trading edge on copper. I'm sorry. Copper is super volatile, super highly impacted by geopolitics. You just need one crazy tweet from Trump and this happens. So I avoid copper like the plague. Daddy Powell to us, Uncle Powell to Josh. Hence the USD, settle on a PFP please slugs. The new Kiyosaki edge. Kiyosaki is crazy. Just do the opposite of what he says. And he's not crazy. He is just a marketing genius and he's a scammer. Hence the USD. Retail loves to counter trade. So I think that sells by... Yes, of course. So retail loves to follow perma bears. Marco GP Aussie shorts is one of my top setups. Okay, cool. I think that's actually a fine play. GP Aussie. Yeah, actually, let me think about this. GP Aussie is pretty good because I'm bearish on... Whoa, okay, GP. I'm bearish on the GP. I'm actually bearish on the Aussie as well. Yeah, not for me. Right now, not for me because I want to short the Aussie. So I can see the downtrend. I can see the EdgeFinder reading. The COTS, you have to ignore them. So you have to ignore COTS because of the US government shutdown. Yeah, not for me. But if it follows your plan, I don't think it's a bad trade. You have the technical analysis. It's in a downtrend on the daily chart. You have the EdgeFinder pointing bearish. So it's not a bad position. Can you check euro dollar? Sure. Also Aussie yen sells going into Thursday. Unemployment data on Aussie. Yeah. So we have unemployment data this week on the Aussie, right? Yeah, we do on Thursday. Okay. And it's a data drought. See, this is all tentative. Most likely it's not going to happen. You only have pound Aussie and the pound GDP. That's it. Very quiet week. Marco, where are you from? I'm from Croatia. It's a small country near Italy. Okay. I wish I was in Italy though. You mean gold DXY to 95, 0.65 to 0.64 Aussie dollar. Okay. Will you close your USD cut position if the rate cut happens? No, I don't think I will. I'll just keep holding it. I'll probably get stopped out by that time. Copper demand is due to increase, possibly. I'm not... I haven't done a lot of research into copper. I've been looking into quant and I think I'm in love. I'm going to pull up to your house with an expensive vest and shades. Okay, cool. Is it an explosive vest or I don't get it? But anyway, see you. Last thing before I wrap up the stream. Croatia is so good for cruises. Yes, it is. How about oil? I don't like oil either. So the two things that I don't like to follow or trade is copper and US oil. It's super volatile, super highly impacted by geopolitics. It's very tough to trade. Okay, and the last thing, we will do euro dollar. Okay, we're gonna do euro dollar. I know there's a lot of other requests. If you have more requests, jump on the stream tomorrow. Okay, jump on the stream tomorrow. I'll be streaming for the whole week. I don't have any discount codes for you this time, but I'll be streaming for the whole week. So the last one, euro dollar, I'm bearish. But I'm not looking to take trades right now. I think the euro is losing a bit of value. I think the dollar is strong. I think the narrative has shifted. What was the narrative at the beginning of 25? It was money flowing from the dollar into the euro. People were saying the euro is our new savior. They were saying the DAX is going to absolutely explode to the upside. Okay. They were saying the DAX is the new Nasdaq. None of it happened. The DAX still looks like absolute dog beep. Nasdaq is still the best. Euro dollar has been flat, super flat. Okay. So I think the narrative has shifted from euro being a superpower to the dollar just slapping euro around. And I think we can see a bit more downside. If I go to the EdgeFinder, Euro USD, neutral, So yeah, I think this should go a bit lower, but I'm not looking to execute a position right now. Okay, pozdrav Marko, držiš li možda trading lekcije? Yes, so I hold sort of lessons in trading. You can check out my YouTube channel for more information. My YouTube channel is Marko's Trading Journey. That is about it. Thank you guys very much for watching. I had a lot of fun today. I will see you guys tomorrow, and good luck in the markets. So goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.